So we will let everybody have a copy of the video after it's done. And for those that can't make it tonight for whatever reason, I'll email those out. Hi, Robin. Glad you're here.
Good evening. Thank you.
Glad you're here. We'll just give
Thanks.
everybody a few minutes to come on in. It's still a couple minutes.
Sounds good. Thank you.
Let's go ahead and give this share screen thing a shot. Can y'all see that? What do you see on your screen?
Just you.
Just me? Let's see if this works. How about now? What do you see?
Yep, you got it.
Now you see welcome to week 2? All
Yes.
right. Hi, Danielle. Hi, Matt. Hi, TR.
How are you?
Hi.
I'm glad everybody's here. We're just going to wait another minute here and see anybody else wants to jump in. Just to remind y'all, this is being recorded. So for the ones that can't make it in person, so it'll be emailed out to everyone. Good deal, good deal. Hi, Cameron. Hi, Brittany.
Howdy. Brittany's getting Kate in. We just got back from the grocery store and supper for Britt's birthday. So we're, yeah, I'll be on the computer in a second, but she'll be up in a minute.
No worries. All right. And hi, Brittany Deakins. We'll have two Dinkins. We'll have two Brittany's on tonight. If Cameron's Brittany joins as well. Two Brittany's. How fun. Everybody have a good week. Have a good day. I do want to know that those of you that are on camera, like, were you able to find any RIA meetings near you? Anybody able to go find any in your local areas? Once again, those are powerful rooms to be in. So hopefully we're looking for those. It's 7:01, so just for the sake of time and to respect everybody's time, we'll go ahead and get started. I do want to remind everybody, hi, Brittany Dinkins, there you are, young lady.
Yeah, sorry, I had to figure out how to turn everything on. Okay.
Yeah. Good deal. Good deal. But just to remind y'all, and for our guests, our special guests that are in the room already, I do want to let y'all know that the way I like to approach these kind of things is let's just all pretend that we're sitting at a round table, okay? And everyone can join in as you'd like, whatnot, raise a hand, speak up, whatever. Don't feel like this is too formal of a thing that you can't speak up if you have a question. Don't be afraid to do that. We'll just pretend we're all at a round table where we're just solving the world's problems here tonight, right? Or just getting our questions answered in terms of real estate investing. I don't know if we got time to take on the world tonight, but we're just going to pray about that, right? Right. So, so a couple just little things I did want to ask about finding the Real Estate Investor Association meeting near you, and encourage you to go to those when you find those. Just go ahead and see when they're holding these meetings. If nothing else, go ahead and just start putting it on your calendar here and there, and just trying to get there in person. It's a very, very powerful room to be in. It's important to know your credit score. We'll find out from our bankers and our banker in the room, and our real estate investors here that are coming in, our private money lender as well that's with us here tonight. We'll find out how important our credit score is to us about in terms of getting money for your real estate projects. So don't forget to be looking on your contractor list. Has anybody even taken a look at the list? Have you seen what all's on there? Yeah, it's quite a bit, isn't it? It's quite a bit. So don't let that intimidate you when you're looking at your contractor list. Just fill that in as you go, right? Don't let that scare you like, oh my gosh, that's a lot. It's okay. It'll come together as it needs to. Just be aware that you do want at least 2 or 3, especially of your contractors, of your painters, of your electricians, your plumbers, because people get busy. And if your electrician can't get to your property in 3 or 4 weeks, well, without power, a lot of times you're just sitting still. So just don't forget that you need 2 or 3 of those. And for those of you that reached out to join the investor launch group on Facebook, I appreciate you. The rest of you just come on in and join, and feel free to ask questions there if you'd like. So don't be shy about that and whatnot. And I'll be putting some little tips here and there in that Facebook group as well. Some different apps you can put on your phone, or different groups you can be in. Search through your social media and find different groups that talk about real estate investing, that can just, some things you can start reading through. Did anybody by chance go to INVSTRlift.com and create an account? Because what that'll do for you, INVSTRlift.com, that's where wholesalers list their properties for investors to buy. I won't say all, I'll just say the majority of those properties are not on the MLS, okay? And this is one of the reasons why it can be important to have an investor-friendly real estate agent on your team, and their phone number somewhere, because you always want to double check their numbers. You always want to make sure that after repair value is what they say it is, because for a variety of reasons that number might be inflated. So just make sure. But on this very first screen here, I've got welcome to week number 2. Yeah, we made it to week 2. And the verse for at the beginning here, Isaiah 40:31, those who hope in the Lord will renew their strength. They will soar on wings like eagles. So I know this feels like a hoping stage for all of us, just getting started and just starting to think along these lines and do these different things. But just know that keep your eyes and your heart on Christ, and God will help guide you and all of that good stuff there. So don't forget to do that. So just a quick review of just what we walked through last week for the special guests that are in our Zoom meeting tonight. Here's what we went over last week. Ways to finance your deals. We talked about cash. We talked about private money lending, creative financing, meaning subject twos, owner financing, and lease options. We talked about hard money lending, and also DSCR loans, debt service credit ratio loans. Does anybody, before I go any further, does anybody have any questions about any of that before we get started? The Jeopardy music needs to be playing. No questions. All right, good deal. Good deal. We'll move on, and I'll introduce to you tonight's featured guest. You see Chelsea Trevino is coming to us tonight from Dallas, Texas. That's why the sun's still up behind her in the window you see there. She's still got light going on. Here on the East Coast, it's getting a little dark for us. But we'll start off with her. She's going to tell us about, she is a private money lender, and she's also a CPA. And then we'll go into Matthew Gordon. Matthew is a senior vice president at the Federal Savings Bank, and he's up in New York. He'll talk to us about the different programs there, like the hard money loans and DSCR loans, what's available to investors, that sort of thing, and give us an idea of what kind of credit we need, if credit score even matters, right, in terms of getting your deals financed. We've got 2 seasoned real estate investors in the room with us tonight, Brittany Dinkins and Alita Lambui. We'd like to welcome y'all here. We look forward to hearing about your experience in real estate and how you guys finance your properties and what you can share with the group here. So, Chelsea, if you're ready to get started, I know you said you need to dip out a little bit early tonight, and we'll go ahead and start with you so you can be on your way.
Well, thanks. I appreciate that. Hello, everyone. Glad to be a part. I came to Reen, probably like most of you, just heard about it through social media, checked it out, jumped on, and here we are. So before I get into PMLs and what that looks like, especially on my side as an MPL that would fund some investors such as those that are in the room, if you could drop in the chat what your background is, whether you're coming from teaching or law enforcement, or maybe you're in the financial services space, things like that, because I know we all have different backgrounds and experiences. So that'll give me a little bit better idea of what the experience level is in the group. So, oh, quite a few financial services spaces, hairstyles, book editor. Okay, great. So, like Sherry said, I do have to cut out a little early, so I'll jump right in. I got involved with being a PML right from the beginning. I haven't done any flips or anything like that, mainly because I have been in the financial services space as a consultant for quite some time. By education, I'm a CPA, so I'm very, very familiar with the number side, but I've also provided consulting services on consumer protection, related to banking, fintechs, financial services, mortgage companies, things like that. So I was very familiar and still am very familiar with how to underwrite loans, what to look for, due diligence, things like that. So it was just a natural place for me to start, and it's been very successful. If you're thinking about becoming a PML, which I know that's not totally what we're going through right now, I do recommend opening a self-directed IRA. There's a lot of custodians out there that offer those services. You do not want to do it under your own name. You can set up an LLC if you have enough capital and cash flow to do that. My personal option and what all mine are under is a self-directed IRA. I particularly use Equity Trust. That's not a shout out, or not getting paid for saying that, but that's who I use, and they're usually pretty good. So what is the PML? Why would you use them? Why is it a really good avenue, a really good vehicle to not only fund a particular project? Maybe you need gap financing, maybe you need a second lien. There's all different kinds of reasons that maybe hard money loans is either not accessible to you. The underwriting process is usually a little bit longer. Matt, I'm sure you're going to go through all of the things that are required through financial services, which are good and needed by all means. PMLs just work and operate in a different way of funding. So my particular ones, I have been in a first lien position, a second lien position, and also as a personal guarantee. Now, PMLs are very interested in making sure you're going to pay them back, right? Whether it be a short-term loan from 9, 12, 18 months, 24 months, that's usually kind of my sweet spot. I don't like to go too much further out because the risk becomes higher. So that's my sweet spot. Just like if you were lending out your money, your PML, if they know what they're doing, they're going to ask you a lot of questions. Where is your money? How much experience do you have? Have you worked in the state in which you're getting real estate, flipping, refinancing, whatever the case may be? How do you contact your contractors? What do you do if you need gap financing? How do you handle extensions? All these kinds of things. I personally have about a page and a half checklist that I send to my investors, asking a lot of those high-level questions, because I want to know I'm getting my money back, and I also want to get a sense of the level of sophistication of my investors. With that said, I have worked with very new investors. I have worked with very seasoned investors. That is not going to be a turnaway unless that's just someone's preference. It's not a turnaway for it to be your first deal. We've all had to do our first deal at one point, right? Once you do it once, you don't have to have a one time again. So I would encourage you not to let that hang you up. As with anything, it'll always be a little clunky the first time you go through it. Everybody's still learning. But I say all of that, do not be offended if they're asking a lot of questions and even questioning what your responses are. That's their job. That's also the bank's job if you're doing hard money lending or any other type of investing. I have my own underwriting process because I have experience in underwriting both consumer and commercial loans. And that goes through, depending on what the nature of the project is, how big it is, how small it is, so on and so forth. Sometimes I'll get personal financials or have a credit report run, but most of the time I don't. I only lend to LLCs, self-directed IRAs, so on and so forth. I don't lend to personal people. The reason for that, it just lowers my risk. If something goes wrong, it's easier to get my money back. And also, just from a understanding of how things really should work, you don't want to do any of this business in your own name. You need an LLC. If you don't have a registered agent for your LLC, make sure you know the ins and outs of that so you can comply with those state laws, so on and so forth. There may be PMLs out there that will do personal loans. It's just not something I do. So once I have a conversation with the investor, I've worked with a few over and over again, just because you build relationships and you network and you start to have those kind of like cadences of who's doing what. Whether it be a beginner investor that I've never worked with before, or the ones that I have, I just get on the phone and start asking questions of what this project is. Is it something that's too risky for me and I'm just not comfortable, which is fine. Every PML is going to have their own level of risk that they're willing to take on. Maybe it sounds really exciting, maybe it doesn't. A lot of times I'll have multiple PML opportunities out there, so I'm just trying to see what fits best with me. So getting on the phone answers a lot of questions. Now, you guys on the investor side, where you're looking for money, be prepared and be educated with what you're asking for and why you're asking for it. If you need $100,000 because you're going to do a flip in 8 months and you have this project plan and this is your RI, and you can speak to what your project is, and you can also speak to, you know, if this goes wrong, I have a gap lender, or if this goes wrong, I have side funds that I can get. All of that is going to give a comfort level to your PML. And I said it again, but I'll say it again. They want to make sure they get their money back, just like you would. So a quick phone call, sometimes a longer phone call, will start to flush a lot of that out. Then, like I said, I have my own underwriting process. I'll send them a questionnaire, and that's where we really start to get into the nitty gritty. I'll have them send me their LLC documents that are signed, types of financial statements, a questionnaire that goes into a little bit more of why they're doing what they're doing, how they're doing it. Have they worked with the PML before? What are their interest rates that they're looking for? Do they pay points up front, points on the end, so on and so forth. So once I gather all of that information, ask questions as we go along. Part of that process is also looking to see what collateral position I will be in. So for those that haven't been in the financial services, whenever, let's just make it simple. So you're going to buy a rental property. Whenever you get a loan on that property, whether it be through a bank, a mortgage company, a PML, whoever you get that from, they're going to ask to have that collateralized under a lien. So if that loan or if that property goes bad, the person's not able to pay back their loan, I'm first in line to get paid back. So when that house is sold, I get paid first. If you're in a second lien position, that means you get paid second, so on and so forth. Like I mentioned before, I have done a personal guarantee. I knew this investor very, very well. I had worked with them before. So I was not in a lien position. I was only guaranteed to be paid back by a personal guarantee. That is in the person's name, not in the LLC's name. Because of that situation, I had the note drafted. I work with attorney as well as I'm a CPA, so I'm a little more versed in that. So I had a note drafted in the person's name. I had it signed by both of them. They were a partnership and notarized, because as an MPL, for a personal guarantee, which is quite risky, I wanted it ironclad. So God forbid we had to go to court, everything was in place and I could execute those documents as needed. Some MPLs won't do that. In my opinion, that's foolish, but that is the prerogative that they have. Another thing that I want to point out, especially in the beginning, when those of you that haven't worked with the title company and don't really know how the formal loan process, signing of the documents work, when you're working with a PML, all of that's going to happen at the title company. And the reason you want it to happen at the title company is because the title company will record the deed, the lien, so on and so forth in the county. I think some are county and some might be by city, depending on what state and county you're in. But regardless, they take care of all of that for you. if a investor came to me and said, hey, we can save a couple $1,000s by signing outside of the title, that's a hard stop for me. I will never do that. I do not recommend on the investor or the PML side or any other type of transaction that you're doing, never close without a title company, because if something goes wrong, you're in a world of hurt. Plus, you just want to be above board and doing things the way that they should be done. So always close at a title company. And we're all in a virtual world. We're scattered all over the US. So you can do that through DocuSign and communication by email, working directly with the title company. I also have direct contact with the title company. I don't go through my investors. Again, just because I want to ironclad, I want to make sure everything's above board. You're also going to want to make sure you have a note drafted. You could use an attorney for this. If you're familiar with how a note reads, you might all have a mortgage. You can probably just go dig through your file and see how it's written. I drafted my own. I used I drafted my own, used AI to finalize it, make sure it has all the pieces that needed it, and I didn't end up needing an attorney. The way that you're going to negotiate your terms is really based on how much you're willing to pay and what they want to charge you. Because PMLs are not regulated from a liquidity or capitalization perspective like banks are, there is a lot of wiggle room. I've charged as much as 3 points on the front and 1 point every time there's an extension or a renewal. The market isn't quite that aggressive, so sometimes I back down to 2 or half a point, depending on what the particular case is. Like I mentioned before, my sweet spot is kind of 2 years, but I always have a 6 month extension in my notes. I would really recommend that you work out an extension clause with your PML. And the reason for that is if you need to extend your project, I only put them 6 months at a time. You don't want it really longer than that. You don't want it shorter because you're going to have to renew over and over again. It's really going to just be a pain. So I always put a 6 month clause, a half a point or a points on top, half a point or a point, like origination fee kind of is what it feels like on top of that. And then it just pushes out the extension. Like I said, the reason for that, if you don't have an extension, you could always negotiate an amendment to your note with your PML. It's just a lot easier to put that that extension clause into the note itself. That might be also a preference of the PML that you may not be able to get around, but I would suggest that you at least bring that up and there can be an extension within the loan document. So I know I've been talking really fast and a lot of information because I have to leave a little bit earlier. So maybe I'll pause there and please ask me any questions. If I don't know the answer, I'm sure I can find it for you in email. But yeah, maybe I'll pause right there for any questions.
Yeah, Chelsea, I do want to ask you to tell us, for those that aren't aware, what gap funding is. You mentioned gap funding a couple times. Just tell them right quick what that is.
Sure. So once you get your project, let's say it's $100,000 home and you need $70,000 to do XYZ, but you need either closing costs or you need a little bit of money to do pre-work, something like that. So you have your loan that you need, but you have a gap of time or a period of time that you need additional funding. You can have an MPL that will fund gap and will fund just the traditional note. Those will be 2 separate loans, 2 separate set of documents, 2 separate types of underwriting. Obviously they're related, so they talk to each other a little bit. It's not like you have to do 2 separate due diligence processes, but they're 2 different loans for different purposes. Some MPLs won't do gap financing. I've done it once. I don't really like it because it's a smaller dollar amount, slower interest. I'd rather have my money in at least a 9-month period of time. Sometimes gap money is longer than that, depending on what the project is, but that's what gap financing is. Okay, and you're saying MPL every now and then. Are you meaning PML? Yeah, sorry, PML, private money lender.
Make sure the letters are what, so there's
Yeah.
not some other acronym we need to learn, right?
My apologies.
Yeah.
Okay, there's some questions in the chat. Let me see. Do people ever extend further than 6 months, and do you charge a fee for that? Yes and yes. I put a 6-month clause in there that I'll extend 6 months at a time, and it's the fee for that is usually a 0.5 point or a whole point. That's negotiable with your PML, with your private money lender, just how they want to do it. If they will extend with no points being paid upfront or on the back end, by all means, take it and run with it. That would be great. I don't do that because I don't want them to keep extending. I don't want to go into forever with this loan. I want it to end. And when you start charging fees, that's usually a good way to get them to finish up that project.
Now, along with the points that you charge, do you also charge an interest rate as well?
Yep, absolutely. That interest rate is payable monthly. So from a self-directed IRA perspective, the loan is to my self-directed IRA. Again, none of this is in my own name, or the LLC if it's outside of my self-directed IRA. And just like you would pay your mortgage, you pay monthly interest. That's how you do it. They send their wires or ACHs to my self-directed IRA and they deposit it and all takes care of that. Most private money lending, I would say all, I've never heard of it not, are all interest only. So you're only paying interest month to month. And then when you have that note mature, whether you cash it out or you refinance or you sell it or whatever the case may be, then that's when you pay the principal back. I've never heard of principal and interest being paid monthly. I guess it could happen depending on how they negotiate that note with you, but it's usually interest only. When you say points, what do you mean? Okay, so point is just a different way of saying an interest rate. So if I say 0.5 point, that's 0.5%. If I say 1 point, it's 1%. Matt, maybe you can say why bankers use 1 point, 0.5 point. I don't even know where that terminology came. It's just
They use point, but it's really just 1%. So if you had a $100,000 loan and you were paying 1 point on it, it'd be it'd be $1,000.
Yeah. Yeah, don't let that.
Okay, Ty. Ty's got his hand raised.
Yeah, go ahead.
Yeah, quick question. Can you all hear me okay?
Mm-hmm.
First of all, thank you all for being here tonight. Excited to hear all the good information that we're going to walk away with. You mentioned self-directed IRA, and my light bulbs went off because I just talked to Fidelity today about my personal self-directed IRA that was rolled over from another company that I used to work with. My question to you, is it possible to leverage my self-directed IRA as my PML to be able to loan to myself to pay back? Or are there implications to doing that? Because I have a substantial amount there. Just never thought about leveraging that as my personal bank. Is that something that's possible?
So technically, I think it is possible because even though you're lending to yourself, it's two separate entities, right?
Right.
Under IRS rules, you're different than your IRA. I would not recommend that because you're not just diversifying your risk. So you are wrapped up in the real estate and you're also wrapped up in the loan. So does that make sense? Like you're not just diversifying your risk.
It does.
Now, this is a little outside of my wheelhouse, so take this with a grain of salt. I do know that some people have life insurance policies that they fund for a few years and they take cash out from their life insurance policy to fund projects, and then they just cash it back into their life insurance policy. I've heard that to be pretty successful if you can get enough capital built up into those life insurance policy. I personally don't do it that way, so I'm sure there's ins and outs that I don't know about. That's just my own personal preference. I would not want to take on that risk of being on both sides of the transaction.
Got it. Makes sense. Thank you.
Sure.
Anyone else have any questions for Chelsea before she has to go here right quick.
One other thing I'll point out is once you do your first transaction, well, now I'm speaking from if you're on the private money lending side. So once I did my first transaction and you get through the bumps and bruises of lessons learned, I'm pretty detailed in my notes as well as personal guarantees and how I write those out. Again, because I have that background, comes a little bit easier to me, but if you're going to lend money out, be very diligent. The language that you use, how you lay the verbiage out, how you lay the interest language out, the maturity date, if there is a personal guarantee, when you can exercise that, how you can exercise that, get everything notarized if you're not like physically in the title company office, so on and so forth, because always think of the worst coming to the worst, and you have to rely on those documents in a court of law, or your attorney presents those to the title company. You just want to not have any headaches that you can avoid on the front end. So I can't emphasize that enough. Make sure your documents are what they say. And you guys on the investor side, when your private money lender sends you a note and the collateral guarantee and all that kind of stuff, read it. Don't just sign it, because they might be drafting their own as well. And if they don't have the expertise of how to do that, you could also get yourself in a world of trouble. So if you need help, ask for it. There's a bunch of us in a network that can, read over those documents and see if there's any red flags. So it's more critical, I would say, than working with the bank, because banks are well oiled. They have attorneys, they have title companies, that's all fleshed out, and they have all that verbiage pretty well buttoned up. Still read it, right? You're still signing your life away to the bank, but read what you're signing. You don't know how it's being drafted, and if something goes wrong, you could really be hurt, really get yourself into some trouble.
Yeah, always have your real estate attorney review whatever it is, or like she said, reach out to someone that you trust that could read through it and help translate if need be, for lack of a better word, to help you to understand it.
Yeah, and if you
What
don't
you're signing
understand it,
before.
don't sign it. I always say that
Right.
for investments in my personal life as well as PML. If you don't understand it, don't sign it. Figure it out first, and then if you're comfortable with it, sign it. Don't get into something that you don't understand.
Yeah, excellent. Any other questions?
Well, I have a quick question. Chelsea, I never thought of using a private money lender, and you were speaking from your experience as a private money lender. What would be the benefit, if any, rather than just going to like a conventional traditional bank?
Sure. So I think Matt, who is on the bank side, will describe the processes that they go through and how they look at investors and the due diligence they do. Private money lenders are usually more flexible. They can have a lot more leeway in the terms and conditions that they write, because it's just me. You're just working with me. Banks have their own, interest rates and capital and liquidity and collateral requirements that they're willing to take on. And if I'm a pretty high risk private money lender, I may be accommodating to your needs, and you can't get hard money loans, or like I said before, you just need gap financing, and a hard money loan is just not available to you. Maybe you're just in the very beginning of real estate, and a bank or another institution just says, we can't underwrite you. We don't have enough information to do proper due diligence. So there's a time and a place for different kind of funding. I'm all for hard money lenders, especially when you need really large amounts. More on the commercial side, if you have big projects, things like that, there's definitely a time and place for both. You don't always need both in every project. So it's just a different vehicle to get funding. One's not good, one's not bad. They're just different vehicles for different purposes.
Gotcha. Thank you.
Sure.
Thank you. Anyone else? If there's no other questions, Chelsea, thank you. Thank you so much for taking the time to reach out to the group here and walk through that with us. And as I've told you all, this is being recorded, so you're welcome to go back and rewatch it. And if you have any other questions, we'll work through those and go from there.
Sure,
But
I
at
can
this
hang
point,
on till about 6:45, another 15 minutes or so. So I'll just hang on.
okay, good.
If something pops up, then I'll drop off.
All right, outstanding, outstanding. Thank you. Well, Matt Gordon, we'll just go ahead and pass the mic to you, young man, and you can walk us through what programs you have available.
Thank you. And thank you, Sherry, for having, me on the call today. When you gave me a call, I said definitely available to jump on and help you guys out. Just a couple of quick questions. People on the call are what? They're looking to purchase their first investment property, multiple properties. Where is everybody at in their investment world right now?
We're all looking at our first property or our next property. We're kind of a mix of first and next. So there's a few experienced investors in the room and a few first timers. So
Okay, perfect. So we definitely have a couple of different products out there. So I am one of the senior vice presidents with the Federal Savings Bank. We're headquartered in Chicago, but we are a federally chartered bank, so we are able to originate in all 50 states. So wherever you're thinking about investment properties, we are able to assist with that. And since we are a federally chartered bank and sometimes we hold some of our own paper, we do have some great portfolio products for investments. Okay. So one of our products for a single family home is 10% down. Okay. Most traditional banks, if you're going a normal investment route, is going to be anywhere from 15 to 20% down. And what else we have as a portfolio is we have for multifamily, with a 720 credit score, we allow 15% down. And most companies, well, I should say all companies, are going to be about 25% down. So when you're coming from the investment world, those are nice products to get started. And, they require a little bit lower down than most banks will. Okay. But those are full doc, right? So we will need tax returns, pay stubs, bank statements, and all that good stuff. So you'll be fully vetted. So that one's a little bit, as far as that, it's full doc. Then we have some other products that are a little bit different. I believe you said you guys went over DSCR last week. So
yeah,
everybody's familiar with how that product works. So we have those. They usually like around a 660 to a 680 and above credit score on those. Usually ranges anywhere from 15 to 20% down. The property, that's all based off the property. So when you're doing your homework, you just want to do the math on how the appraisal is going to come in and tell you what the rental market's going to be, and that basically needs to cover the mortgage payment. They won't ask you about tax returns. They won't ask you how you're going to pay it. It's all based off the property. Okay. We have bank statement loans. If anybody's self-employed and they write everything off, we have bank statement loans where what we'll do is we'll analyze 12 months of your bank statements and then average it out over 12 months on what your monthly deposits are, and we can use that as income as well. So those are some good ones. Is anybody 1099 on the call?
Yes, sir.
Yes. So 1099. I see, Robin, you're a real estate agent as well. So what we do with a 1099 is we take just copies of the 1099 and a P&L for the year, and we give you 90% of your 1099. So if you're a realtor and you wrote your income down to $10,000, we don't care about that. We're going to go up 90% of your 1099, your top line. So that's another good product to keep in mind if you are 1099, because obviously everybody loves to write it off, and I don't blame them. But when it comes time to buy stuff, you need to show something. But we do have these products to get around it. And then we have everything else under the sun. We focus on residential 1 through 4 families, condos, stuff like that. But we have a tremendous amount of flexibility on some of these things because, like I said, we are federally chartered, so we do keep some stuff in-house if we need to. Maybe it's just not fitting the box on a Fannie or Freddie file. We do have, the maneuverability to hold it on the books. Okay, but those
do you do hard money loans?
We don't do hard money. I have people out there that I go to, but I don't personally do them at the bank, but we do have the outlets for them. So anything that you think you need a hard money loan for, reach out to me. We can get you set up.
I have a quick question as well.
So I was using investor, obviously, but do y'all do bridge fix and flips? You know what I mean? You may have a property where like a DSCR might not be appropriate and you want to do a bridge fix.
Yes, we have I broker that out to a broker channel that we have through the bank, but yes, we have that for the fix and flips, and they're usually about 10% down as well.
Okay.
You know,
Yeah,
especially if you're experienced, you should probably be able to get 10% down and 100% of the financing of the construction.
Yeah. And you can
Yep.
take like draws or whatever. But I
Yep.
think that when we think investor loans, that people always, I think DSCR is like a really popular tool.
Because it covers the property and it doesn't care anything really about you except your credit score. So a lot of people use that one.
But there are others out there though.
Yeah, there's definitely other options. It's not the only one. And like I said, we have the other ones where we could do the 10% down and you don't have to worry. So when you go Fannie and Freddie, which are the two major companies that buy the mortgage backs, they don't allow you to flip a contract. So you might catch a wholesaler and he can't assign the contract to you and you just get a traditional Fannie and Freddie loan. But with me, with the 10% down product, we can flip it. We can flip the contract and get assigned to you, and we could still do it with 10% down. And then eventually you end up refinancing out of the 3-1 ARM and going to a 30-year fixed. Okay.
And let me speak to when you buy the properties in an LLC, and if you decide to JV, to joint venture with someone, if you partner up, let's say if you're worried about your credit score, this is a great time for you to find a partner that has a great credit score. Because Matt, correct me if I'm wrong, if you're JVing in the LLC there and say one of you has a credit score of, I don't know, 550 and the other one has a credit score of 750, what you can do, how you can set up your LLC is you can do 81% ownership for that person with a great credit score and 19% ownership with a person with the terrible credit score for the financing stage of it. So in other words, when Matt and his bank goes to look at the LLC and the financial situation there, they'll mainly look at the person who with that 81% interest in the LLC. And then once you get funded, at that point, you go back into your LLC in your paperwork and you can put it back to 50-50. So just so you know, if you don't have a great credit score, don't think you're out of the woods and I can't do anything till I get a 660, 680 credit score.
Yes, there's always some workarounds to figure out how we can get it done for sure.
And that's another good example of where private money loan might come in because those underwriting criteria are just different. So that's a really good example of how these can kind of play off of each other. Matt, do you guys accept private money gap financing for the down payment?
On the investment one that we have, yes, some of the outlets don't really care. They don't season it. So as long as they have it in the account, we can definitely do that.
Okay. So as I was talking about before, the question came up, what is gap financing? That would be a great example. Maybe you need $20,000 for a hard money loan. You can find an MPL and you got a deal.
Yep. That's definitely a way to go. Just typing my information into the chat so everybody has my contact info.
Anybody have any questions for Matt? No questions.
Robin,
Well, you've got his info there.
Robin, when you get a chance, I put my info in there. Just give me a text with your information. Are you the only realtor that's on the call besides Sherry?
I'm licensed as well in North and South Carolina, but I act mostly on the investor side.
On the investor side, okay, perfect. So yeah, so just give me a call, Robin. I want to go over a product that we have with you that's for realtors only, and for you guys to earn commission.
Super cool. And then I believe Charmaine asked you about, gosh, what were you talking about, Charmaine? And construction loans, taking the draws. Was that you?
Oh, somebody brought up the fix and flip. So yeah, we have construction to perm loans also. So if you know somebody that wants to build a house, it's a little bit more in depth of how it works, but you're able to buy a piece of land and build at the same time. You know, you have to get started right away. We don't do land loans, but if you were looking to buy a house as a primary or second home, we don't allow that for investment property. But if you know anybody that wants to buy a primary or a second home, we could do construction to perm. And what she was talking about with the draws is as the construction's getting done, they're releasing more money to the builder, right? They don't give you all the money up front and say, hey, go build a house, do whatever you want with the money. Everything is, monitored and looked at and
Right,
signed
right.
off
No,
on.
no, I've actually built withdrawals before, so I know,
Yep.
I'm familiar with that, but, my question was, um, if I already have a piece of land and
If you already have a
now,
piece of land,
yeah.
yep. Go ahead.
Mhm. And now, my husband and I want to build some rental, properties on it. Like actually, an RV park, slabs and pull in and all that good stuff. So RVs can come and do camping there. So
That I would have to search for an outlet for, because I know our traditional construction to perm is for just primary and secondary, but inside the bank we have broker channels. So if you could just email me with exactly what you're looking to do, and I'll try to find a home for it.
Awesome, awesome. And yeah, I know that's my own personal thing, but just in general, you were saying the construction loans are can only be for primary and not
Primary
for
or second and vacation, not investment.
non-investment.
Nope.
Okay, so what if someone had to rehab a property that needed a lot of work that it wouldn't
Yeah,
be
we have
considered
rehab
construction?
loans.
Okay, but it wouldn't be considered construction. It would be a rehab. Okay,
We
thank you.
consider rehab.
Roger that. Thank you.
Outstanding. Thank you. Any other questions for Matt?
I'll hang around for a little while. I have a 8 o'clock Eastern hard stop, but I'll hang out for 15 minutes if there's any questions, and I'll just be in the background listening to what you guys got going on. It was great meeting everybody.
And I've got to
Thank you, Matt,
run,
for being here.
so I dropped my information in the chat as well, and glad to meet you, everyone.
Thank you, Chelsea.
Bye-bye.
I should have asked her if she's a Dallas Cowboys fan. But, many of y'all don't know I'm a big Washington fan. So, but besides the point, I can ask her that tomorrow. But the other two ladies that are guest speakers here in our meeting tonight, Brittany and Alita, these are seasoned investors. And ladies, I'd just like for you to share with the group the projects that you've done and how you finance them. Do you use a variety of different ways, or do you pretty much stick with the same type of financing for your properties? How do y'all do that? Who wants to go first?
I'll go. So, good evening, everyone. Brittany Dinkins. I am actually a third generation real estate investor, but I just got started full time within the last 2 years. So, I actually worked as a speech language pathologist prior to delving in. It was something I always had an interest in, and I actually became licensed as soon as I finished graduate school, but I just went the whole 9 to 5 route, which I'm not upset until I was ready. So back in 2023, I started my LLC, and during that time frame, I actually did a mentorship program. So in this mentorship program, so I will say doing things, I did a more one-on-one mentorship program, but group mentorships like this, where there's speakers, there's seasoned investors, there's loan officers. Like Sherry said in the beginning, I cannot stress that enough. Like go to Charlotte RIA, go on Meetup, look up, different events, because there's a lot of information, there's a lot of knowledge. And in this industry, your network is definitely your net worth. So I will say that. So for me personally, I specialize in things pre-foreclosure, foreclosure, tax liens, bankruptcy, probate, and divorce. So I'm gonna be honest, probate here lately and even bankruptcy have been my niche. And so what I mean by that, a lot of times in order to get out of bankruptcy or in order to close a probate, a lot of times people need to liquidate their properties. So that's like where I come in hand, and I work closely with attorneys. So again, we talked about that Rolodex, right? So I work closely. Obviously, I have my Rolodex of real estate attorneys, but I I am connected with divorce attorneys, probate attorneys, and yeah, attorneys who can feed me deals. So I'm solving their problems and they're helping me. So a little bit about what I do. So I am mostly a buy and hold investor. And as far as financing, I've done a little bit of everything. I've used bridge fix and flip. I've used cash. I've done creative things. I've done DSCR. I really haven't done hard money at this point, like not outside of like anything with my mom, but on a personal level, I have not. But it's a great tool as well if you need it. Um, I will say this too about real estate investing. People think that you need a lot of cash to get started. I think that's kind of a myth. I think that you have to be creative in how you find your deals. Again, like Investor Live, like just join all these online platforms, even in Facebook groups, guys. Like they have Facebook groups for investors. I was a day late and $1 short to a deal not too long ago, but people literally post deals in the Facebook group. So, hop on those. But yeah, people think that you need a lot of money. I mean, that's hard to say. When people ask me like, well, how much money to get started? It really just depends on the situation that the person is in. So for me, like I've done things like I said, mostly like foreclosure and probate. And what I will say about like the foreclosures or whatnot, a lot of times I try to work with the homeowner before it goes to the auction. Like I'm sure everyone's like aware that each county has these sales like monthly or however often. But for me, I think it's key to get to the homeowner and try to work something out before the foreclosure sale because the numbers tend to work a little bit better that way. And then as far as things like divorce and probate, I guess for me, what I'm saying, you want to find people who are in distressed situations. And sometimes that's where you can get bottom line numbers and kind of figure out what it would take for the person to walk away from the property, if that makes sense. So that's mainly like how I do my deals. And like I said, it just depends. Like if I have to DSCR it, if I need a little cash, if I need a bridge, I mean, if there's hard money. And again, like don't be afraid if you need a business partner or if you need to joint venture. You know what I mean? Like for me starting out, it's been my family. But if you have that best friend or that aunt or that cousin or the person you meet at Charlotte Ria, everybody has to get their first deal and everybody has to start somewhere. And one other thing, like I did tell you guys that I buy and hold a lot. So where I feel like my mission's a little bit different than the average investor. When I help distressed homeowners, I'm actually appearing on the news in the morning with this client. But I had a client, she was my grandmother's caretaker, and her grandmother had passed away, and the property went through probate, but of course there was no will. So after the probate, the property went to my client's aunt. So the aunt was pretty much like, good luck, like you'll never find the money to catch this house up. Like this house is gonna go into foreclosure. So the girl had kind of approached my mom and she had approached me before, but she was afraid. But of course, like when it gets down to the wire, you have to do something, right? So what ended up happening, I ended up purchasing the property and she did a rent back for me. And so what I told the client, I said, okay, you have 1 year and these are the terms that I will sell you the property back at. So pretty much I ended up splitting the equity with her. And I said, so if she would have bought it back in 6 months, it was one price. And then after 6 months and 1 day, it was one price. And then on a 366 day, I had the right to not sell it back to her. So that deal happened last August. And she closed on the house in June and she was pre-approved in April. So we went with the 6-month number because she pretty much ended up getting approved. And I walked alongside of her like every single step of the way. So I helped her. I put her with a lender. I helped her with her credit. I didn't just say like, here, I'm giving you a year, good luck. I actually gave her the year and I walked her through the steps. So sometimes it's not always like about building this big portfolio or about like flipping. For me, it's also about like changing lives. And before I let the other lady talk, another thing that I've done, I purchased a property not too long ago. A lot of investors came after this particular gentleman, but he wanted to work with me because a lot of times when these investors buy these properties, they're not going to let you stay. They're not going to split the equity. So I have a gentleman, basically he's staying and he's paying like what he can because obviously he was losing the house. And the deal is that I'm going to help him find some more permanent, affordable housing. And then also I'll give him some of the equity because it still makes sense for me. So you know what I mean? It's like, I think when I entered this, from a more solo standpoint, I think I went into it thinking more narrow minded, that I was just going to find houses and either fix them and flip them or fix them and rent them. But there's literally like so many options. Like the sky is the limit. And of course, like I know that the lender didn't really talk about it, but like with subject to, you know, where you can kind of see what the person owes on a house and you can figure out how you can make that work, and maybe they can walk away and you give them a little money. But there's definitely many options, and you can make money and change lives. So I know that that was a lot. So I don't know if anybody has any questions.
Go ahead and Alita. And
I just want to say, Brittany, that was so beautifully put, and such a professional young person, and that yes, there's a time and a place for charitable giving, but this is your business, and you made a choice to not only run the business very well at this last deal that you were talking about. It was a pre-foreclosure, right? Or whether the probate.
Yeah, it was pre-foreclosure. It's probate. It can be both. So that's another thing.
Yeah.
Like you can be you have to make payments while you're in probate. That's a different conversation. And if you don't, a lot of people don't understand that, even if they want the property and they get behind and they end up losing it. But I'm sorry, go ahead.
No, that's true. That's true. I did 2 probates this year, and so they would have lost the property had it not sold. So we were very fortunate. There's one particular one that we got it sold quickly for them, but that you came alongside them and you based it. Yeah, it was an in-house, all inclusive. So my question would be, you said everybody knows that there's sales for foreclosure and they come out every month. But at that point, hasn't it already been assigned to the bank, and the bank has their own little people in-house that they're gonna list with? And then, like, how do you get in as an investor in the pre-foreclosure? How do you find that?
Are you saying how do I find out the houses that are going to be auctioned, or how do I find the houses before the auction list?
Right, before, I guess it would be best to find it before it goes into foreclosure, right?
Yeah, so you'll be surprised. Like, I have an assistant. I do a lot of cold calling. Um, Even you'd be surprised, like going to Charlotte Rhea. Like I said, the one girl was my grandmother's nurse at the nursing home. I drop my business cards. I tell everybody what I'm doing. You could do bandit signs. You know what I mean? Like, have y'all ever seen the signs on the side of the road and they'll say like we buy houses or whatever, and you like put your phone number, your email address on there. You could do bandit signs, flyers, going to meetups, networking events, cold calling, and I would even go to like tax sales too, because you could get the list from like tax sales and you can call from those lists. And then like probate records are public records, so you got to figure out, you have to, like, I don't, each county is different. That's why I'm not telling you. It's not that I don't want to tell you, but I don't know like exactly what counties, and you'll be surprised. Like each county kind of has its own. Some counties, like in South Carolina specifically, in some counties there are certain records that are online, but then you'll go to another county and then those same records you have to go in person to the government offices to pull it. So that's what's hard to say, but um sift through public records. And even sometimes one probate deal I just did. So, okay, whenever you go through probate, creditors and when you open up probate, creditors and debtors have like 8 months or something like that, to basically a year to file claims against the estate. And so actually I bought a property that I found in the public records where a post was being ran for the creditors and debtors to file a claim. So basically I called and the house was in an active foreclosure. So I kind of rode the deal out until the probate was closed. And then I purchased, as soon as the family got the deed of distribution, I bought the house from them. So you know what I mean? And so, and also, even if you look in like the Star Reporter or the different public records for these different counties, honestly, just because stuff gets postponed too. So, the paper is kind of like stressful, but I have found deals like that too, like sifting the public records and the online papers and stuff. It can be stressful because you're working with a 2 or 3 week timeline, but sometimes you can, I've gotten deals that way too. You find those homeowners and you call them, and sometimes you can get a postponement, or sometimes they end up postponing it anyway, and you can work a deal with those people. So, or actually go to the sales. If you go to the sales, you can kind of see what's sold and what's postponed and what's not, and deal with the homeowners that way. So they're like the sky is the limit, I guess I would say, on how you meet people. And
Brittany's unknowingly jumping into our topic for next week. Brittany, is where to find houses, how to find deals. So you're segueing right into our class next week. But
yeah,
but yeah,
just anywhere,
yeah.
right? Sherry, am I right that you literally have to you have to network, you have to talk, you have to sift public records, you have to cold call, you have to do all the things, and then
we're gonna go into all of that next week. Yeah, that's next week.
Yeah, just do all the things, but good luck. And I'm sure that and I will say this one last thing, like your deals eventually will come to you. Like I didn't believe that when I first got started, but it's like the same young lady whose house I saved. I bought her cousin's house. Like they don't want it. So I bought her cousin's house as a rental. And not only did I do that, the tenants I have ended up paying the lease up for a year. So like it's the gift that keeps on giving.
Yeah. And it's great to come to it to be able to have problem solvers, right? We're basically problem solvers that are getting paid.
Yeah. No, you have to think of it that way, because a lot of these people are in dire situations and they need you to solve their problem. So when people are distressed and they feel like that you are genuine and you can solve their problem, they will work with you. I promise.
Yeah. Most definitely. Most definitely. Thank you, Brittany, for going through all that. Alita?
Thank you. And I'll drop my information in the group chat.
Thank you. Thank you so much.
Hey, good evening, everybody. And thank you for having me, Sherry. First of all, I just want to say everybody on the call that is working with Sherry is in such good hands. She is the best mentor and coach that anybody can ask for, just the way she presents the class and how she talks, and her faith is just enough to, keep everybody inspired and to lead. That's what we need. That's why we go into a mentorship or follow a leader, just to experience their way and also their trust in God in this whole endeavor. So first of all, my journey started with real estate investing in 2023 when I did a mentorship for a year with the Women's Real Estate Investing Network. And then after that, I started to learn more about the different asset classes and investment classes. And very soon I found myself running around having shiny object syndrome, wanting to do this, wanting to do that, then learning more about that, and then seeing that and wanting to learn more about that. So it really is a thing. And in the end, looking back after a year and a half, I haven't done anything. That shiny object syndrome was followed by imposter syndrome, because I did not have enough courage, I didn't have enough money, I didn't have enough anything that I thought would make me do what I really wanted to do, and I really wanted to go into investing. So just a little bit about myself is my accent is from South Africa. We've been in the US for 7 years now, and I have had my own interior design company there, as well as a good sized property portfolio, which we sold off and just decided to start afresh here in the States. So with that said, is I didn't have any money to invest in any of the houses that I bought. So last year at this time, I was thinking, what am I going to doing my planning for 2025, and what am I going to do in 2025? I now need to start doing and stop learning, stop chasing mentors and having shiny object syndrome. So I narrowed it down to what my passion was in this real estate arena, and I really had a heart for helping people in terms of creating bedrooms and creating luxury accommodation. I then got to learn more about the co-living model, which is also, a good platform to be used. It's the Pad Split platform. And I have joined a mentorship with that and just educated myself and, kind of learned that model, which was amazing to me. So now I can combine my passion for design and for real estate and create beautiful bedrooms. So we have got amazing people filled in our houses. They are all individual professionals. They've got respect for themselves. They've got respect for us. We've made their rooms really beautiful. We charge a little bit more, but we get an amazing class of um, not investors, of tenants, of members, as we call them. So I just love that. And the gratitude going to those houses, talking to those people saying, this is the most beautiful room I've ever stayed in. And I've created such a great community within this house. It's just so heartwarming to meet these people and see how something small is impacting their lives so much. So my journey so that was last year. Last year, I decided that what my goals were for 2025. So I had a little calendar on my desk that says every third month I need to buy a new house. And I don't have any money. I really do not have any money. I do not know how I'm going to raise this money. And for 1.5 years, that has kind of put me back, because who am I to say I'm going to buy a house, but I don't even have enough money. I don't earn enough money on my W-2 yet. So it was just all the self-talk that sabotaged me. And last year, after I've taken the course on the co-living, I then had enough confidence and I started to I started to do the footwork. Now I've got a little bit of time and I've got a little bit of knowledge about property, and I know how to do a deal, I know how to structure, and then the design factor. So I started creating a pitch deck that I was going to present to ladies or gentlemen that would want to invest with me. So I built a beautiful pitch deck, and then I probably looked at 50 houses before I found the first one. And, I presented that, and I did a little mood board on how I want to get it designed and how I want to have the rooms, how we're going to divide the biggest spaces up into smaller spaces, not too small, but still have it comfortable for people to stay in. And I then had the opportunity to present it in networking groups. And as Brittany said, your network is your net worth. So from March this year up until where we are today, and that's probably, I can take it back to July, because that's when I closed on the 2 properties that I am busy burring. I've bought 4 properties with 0 money down, 0. And if somebody had told me that last year, I would say, no, it's impossible. That is impossible. And you know who I've got? I've got amazing ladies investing with me. Sorry, men. I just am networking with a whole bunch of amazing ladies at this stage. But I've got people investing with me that use their self-directed IRAs as the previous lady spoke about. Chelsea spoke about earlier. So they use their self-directed IRAs. I provide to them between 12 and 14% per annum, and they would give me $50,000. The house is there. They're on the LLC. I apply for the DSCR loan. I just made sure that the only thing I could do was to get my credit score really high. And that's what I worked on doing for 3 months last year. So in January this year, I actually got a 720, which was great for me. So after I realized that's all I need to bring to the table, heck yeah, I can do that. And I did it. And what was so interesting, some of the ladies that's got the money do not have the credit score. So they want to partner with me because I've got something that they don't have, and they've got something that I don't have yet. So that is just a beautiful, beautiful way to structure relationships and deals. So with the two-pad split, I've applied for both of them as a DSCR lender, and then I've got two ladies on both of them being a PML. So they both gave me their money, which I could pay the 20% down, and then bought furniture for the houses and had the closing cost and the carrying cost for 2 months. And then the other two houses that I'm busy with now is the bird method, which I'm sure Sherry will be teaching you, or she has taught you. But that is where you buy at the right price, you do a fix, and then you hold. You do not sell it. So it's not a fix and flip, it's a fix and hold. So with that ones, I've got a hard money lender and I've got a different private money lender on the one of them. The other one, the same, hard money lender and a private money lender. The one is almost done. Well, we're in the process of doing a rate and term DSCR loan on that. And now I would need to bring some money to the table for closing costs just because the numbers worked a little bit different after appreciation. But I now have another PML lined up who wants to invest with me, who believes in what I do, how I do it, and want to support, co-living. And she now has put in money, which I would use to do the closing, buy furniture, and carrying cost for the first 2 to 3 months until the house gets filled up. So anything is possible, ladies and gentlemen. I am a living, walking example of that. Don't ever not believe in that. Don't think, and it's all natural to go through imposter syndrome, to have shiny object syndrome, but just realize one morning when you wake up, now is the day. Now I'm actually going to trust myself, and I'm going to trust God to take me through this and walk with me, because you know what happens once you take that one step in yourself, in your own confidence, everything else falls into place. Now there's no more worries. Where am I going to get money? Because that was my first thing. Who am I that anybody would want to invest with me? Ladies and gentlemen, there are 4 ladies emailing me constantly asking, a leader, when can we do a deal together? And I'm not saying that to boast or saying that to do anything other than to encourage you and tell you what is available, what is out there, and that it all is possible. That's all I want to say. I've got a beautiful website coming up in not January, in Monday. We're busy working on that. I'll drop the website down here. Then you can just see my properties, how I do it, how I love the design, how we do the rooms, and my next journey, or my goals for the next year. I'm busy working on those. Is again co-living, about 4 to 6 co-living houses. But then I also want to see how I can accommodate veterans. So once you get in the sphere, it's such a beautiful industry to be in, because there's so many things you can do to help people, to create win-win situations, from when you start, from when you purchase a property, right all the way till you get it filled up, either with a VA, or any group homes that's possible. So that is what I want to do for next year. And then I also want to look into residential assisted living, just because our older people do not have proper places to stay. That is a huge thing that is coming up. I think it's the baby boomers, as they call them, that would not have enough places to live in, you know. So that's one of my things that the Lord has put on my heart, and I'm excited about that journey. And again, it feels like I'm getting shining object syndromes because now I'm doing co-living and I want to do the VA and that, but it'll all work out. It always does. Thank you for having me. Do you have any questions that I can answer?
Yep, Ty's put one in the chat for you, Alita. Can you
Oh,
talk a little more about your pad split experience and how successful it's been for you?
oh, is that a question? Sorry, I can't see the question. Alita, can you? Oh,
And,
yeah. Hey, Ty.
and
Yes,
how are you?
I
And
love.
to elaborate
Fine.
before
How
you
are you
go,
doing?
good. Thank you so much. And
Good.
thank you to you,
Listen.
Brittany. I had to step away too. I really enjoyed your session as well. Um, the past split, reason why I'm asking, and Sherry knows this, our last house that we purchased and renovated, we turned a 3 bedroom into a 5 bedroom because it had a basement. So a lot of rooms in Winston-Salem. And we don't know that market
Oh,
very well, but it was a house that we got from my mother-in-law. And so essentially, we have a lot of rooms, and right now we have a full-time renter in there. But the next stage, once their lease is up, we want to turn it into something like Pat Split, co-living, residential living, um, home for veterans. So all the stuff you named is like my inner spirit.
good.
So I kind of want to hear if you've had some success with the co-living situation. What are some of the positives and some of the things to be aware of, some of the negatives, things that we should watch out for. Essentially, we want to maximize the income in our property, but also help a lot of people at the same time.
Yes, that's a heart that we're doing it also with. So, what this has all led to, once all my two other properties are done, you know, by the end of the year, we will have 30 rooms, you know, whichever way we want to rent that out. So with the co-living, and more or less or you know, more focused on pad split, is that I've decided to stick to their platform in terms of scaling. I might not be with them all the time, but while I'm busy building my business and, you know, chasing my dreams and my goals for this year, I cannot go and look for tenants and do placements, etc., etc. So that is all that they bring to the table. So I do not need to do that heavy lifting. I've got enough to carry on with on this side. What I would say, something that we have learned in the earlier stages, is to do a secondary screening. So they will screen the tenant and get them connected on the platform. By the way, the platform is very easy. It's an amazing platform. I find it, you know, very good. And then the member will talk to you. You can then have a conversation with this member and kind of in somebody's voice, you can learn so much from them. You know, are they respectful? Would you know, do you think they're going to have respect for you? What do they do? How do they work? You know, so these are more focused on our gig workers, Amazon drivers, DHL, the people working, you know, working with our baggage in the airports, and really people that get between $15 and $22 an hour. So that's more basically what we have focused on, providing beautiful, comfortable, luxury, affordable living for them. So that's the only thing that we would do now, as we didn't do that in the beginning. We had some people moving out, and that we could really just say thanks for leaving. So we are doing a secondary screening now and asking a little bit more questions and the more personal interview with the tenants before we approve. Other than that, payments and that is all worked out by pad split. Also, you know, because we work with people that, you know, if the battery of their car goes out, then they might not be able to pay the week's rent, you know, so we are very aware of that. But then we also would ask them in the interview, something like this happened, please reach out to us and let's see how we can resolve it, how soon we can get you through this bump in your road, and how can we help you to get back on your feet again after something like that happens. So it is basically the only thing that I would say at this stage that I would suggest anybody do from the start is that second screening.
Perfect. Thank
And
you.
just to tell you, Todd, how I do my screening as well. Like when I was property managing my own properties, I had that property management contract that they would sign, but then I had this whole other questionnaire that I basically would like either stand in the kitchen with them or I would meet them somewhere, whatever, at a restaurant and sit down and go through this little multiple page questionnaire and and it's the craziest questions. Do you own pets? Do you smoke? Do you host a lot of parties? Do you just little questions, things, and it's super simplistic. And I would have them initial each page, just so if something were to ever happen, like, hey, by the way, do you remember signing this? And we went through this, and it's crazy to say, but sometimes you have to talk to people like we're all children, because truly we're all little boys and little girls at heart, right? Right. So you just have to remind people like, hey, by the way, I just want to walk through this little questionnaire with you, and we're just gonna, go through and check yes or no on each one of these, and we're gonna initial at the bottom that we've gone through this, because I just want to know, but that's going to give you a really good indication of what their character is, and give you an idea how they answer those questions, how they physically, reading body language, that's important as well, how they physically respond to those simple questions, why are you asking me this? Well, it's my house. That kind of thing. And I wouldn't tell them that when I was property manager. I would tell them, well, I'm working for the owner, because I learned that the hard way, that I didn't want them to know necessarily that I owned the house, but I would tell them I was working for the owner, right? Just to be the middleman kind of thing. But you all are going to get my little super simple, crazy questionnaire. And I promise you, when you read through it, you're going to be like laughing, like, Sherry, you really ask these people this, right? But I do. But I really do. I go through it, kind of thing. Does anybody else have any questions for Alita or Brittany, either one?
I was gonna say, Sherry, I do agree with the questionnaire or whatnot. Like I do send out a preliminary. I use like a form, electronic form, and whenever you pay your deposit or you pay the application fee, I ask a lot of crazy stuff on my application as well. I mean, you have to, because you want to know who you're getting. And there's other things I would say about a lease, but I guess y'all would talk about that like at a later date.
Right. Maybe we'll have you back, Brittany, so you can help us go through that sort of thing as well, because I know Brittany is a powerhouse, and Alita as well. These two ladies are absolute gems in the real estate investor world. So we're super blessed to have them both here with us tonight. Robin, you've got your hand raised. Do you have a question?
Yes, ma'am. Miss Alita, that was such a beautiful mindset, the way you just walked us through your journey. I was just hanging on every word, and I can't wait for Sherry to share the recording, because just today I'm on the phone with my partner, and my son is listening. He's like, I want to also do real estate. He's military, and he sells franchises, and I would love him to hear all you people. Especially, my question for you, Alita, was what was your first deal? Like you said, I wake up, you finally got over your imposter syndrome and the shiny object syndrome, and you're like, this is the day. This is the day it's going to happen. Like, what was your first deal, and how did God put all those things together for you for that?
Okay, so my first deal, I started looking in January. I started looking at houses. So I would go to so many houses and put in crazy offers. And it was, no, it wasn't in December. And then in January, somebody had their house on the market for about 70 days just because it was over the winter season. And then I also learned that people do not sell as many properties and it's on the market for longer. So I put in an offer and then it got accepted, and it was with a DSCR, and that specific one was a little bit longer. So we closed 1st of March or early in March. And after that, it just kind of, as Brittany says, the deals come to you. Things just start working out. Then my real estate agents would see what I'm looking for. They would start sending me deals. So what I did was just starting to do a whole lot of deal analyzing, putting in some offers that make sense to me, and not trying to, to make the seller feel that lowballing the seller, but it also needs to make sense to me. So, and that happened 4 times in this year for me. But I must say, I've probably put in 100 offers to get those 4. But it's being consistent, not losing faith, not losing hope, trusting God, trust the process. And then I was stressing, who's going to finance me? Who's going to finance me? And I did a killer pitch deck. I had ladies and investors calling me, and I took them through that. I then called people to ask, how did you do this? How did you answer this question? So I think the main thing about this whole investor world is just focus on your first step, and then the rest will fall in place. You're going to meet somebody that you can ask the following question and the next question if you don't know. And that's what's so beautiful about it. Everybody in this industry really wants to help and really wants to see you succeed.
So
Wonderful.
true. So true. Yes. Thank you, Alita, for that. So very true. Don't be afraid. I love the part where, Alita, you say, don't be afraid if you don't have any money, because it's out there. It's out there. And Alita, I'll just ask for the class, because I know maybe a lot of us haven't seen a pitch deck before. Would you want to email me one, and I'll send it out in a class email just so they could see what your pitch decks look like, what she presents to her private money lenders, so you guys know what she's talking about. So you can see one of those firsthand. Thank you in advance for that, Alita. And gosh, thank you, Alita and Brittany, both for being here. Honest to goodness, this has been a powerful, powerful little question and answer session for our first class. First class of Q&A basically is what it's not our first class, right? But it's our first class of question and answer kind of thing. So just somebody nod your head and tell me, am I screen sharing? Can you see what we're for next week? Yeah. I just want to just kind of go over a couple things right here, because we're going to end here in about 4 or 5 minutes at the most. So just once again, if you've not found your local RIAs where you are, I know we're all located kind of all over the place. Find your local RIA meetings and get one of those meetings on your calendar, and get your hind parts in that room. You guys, get in those rooms and just start putting your face in there and asking questions and finding out who the players are, who the full-time investors are, and get their contact information. Look at your contractor list there that I've emailed you, and just start kind of building that, getting some names and numbers there. Continue to read through your glossary of terms to be familiar with are these people talking about, right? Like, you might have heard some terms tonight you've not heard before. So don't be afraid to just refer to that as well. And that website, investment, start getting used to reading how wholesalers market their properties. So a lot of them will put numbers in there. I told you just to beware of those numbers. Just don't necessarily take all those numbers to heart, but I want you to start seeing how they're marketing their properties and get used to reading those. And once again, the private Facebook group, if you guys want to join Investor Launch, feel free to jump in there, and I will email this little slide deck to you so you'll have all that. And the final scripture I want to close with tonight is Matthew 7:7. I'm sure all of us know this one, right? Ask and it shall be given to you. Seek and ye shall find. Knock and it shall be open to you. You guys don't give up. Don't let that fear monster jump in front of you, okay? Has anybody started listening to the book, Outwitting the Devil, yet that I emailed you all? Anybody started listening yet? Alita, Brittany, just so you guys know, I sent them a Napoleon Hill book. Napoleon Hill. It's on YouTube. It's a free right. Okay, you've heard of it, called Outwitting the Devil. It's basically where fear comes from, right, and how to overcome it, kind of thing. So it's a very powerful book, you guys. Just when you can, I encourage you to start listening to that, so you're not afraid, and you know where your fear comes from, and you know where we know where our help comes from. So by all means, next week we will be talking about where to find. It's time to find our house, right? We've got some financing figured out at this point, or at least kind of got an idea of some different ways you might go about financing your first or your next deal. And next week we're going to walk through different ways you can find properties. So let's see, Cameron says in the group, Think and Grow Rich is another book that'll push you to keep going. Yes, yes, yes. Good, good. Napoleon Hill was, oh my goodness, it's amazing how everything he wrote, you guys, is still applicable today. Fantastic, fantastic author there. But next week we'll go through where to find your properties, how to go about getting your houses in way. And if you just want to drop in the chat, yes, if you would be willing to partner up. If you think you want to do your next deal or your first deal with a partner, if you want a JV or joint venture with somebody, Alita and Brittany, you guys feel free to respond as well if you'd like. Just put that in the chat, and that way everyone can see exactly who's looking for what, right? Okay. That way we know we might have some partners here in this very Zoom room with us, right? Fantastic. All right, before we sign off for the evening, you guys, does anybody have any other questions or anything else they'd like to share?
So you made me think of a couple of things I didn't tell y'all that I do. So one thing that I do, so I did this in my mentorship program. So I was a reader before I got into real estate. So a lot of it is like you have to bathe in motivation, like, right? We don't always wake up motivated. So as I've been going through this, like I read a book called like Going for No. Like sometimes like you have to go for it or you're gonna get like a bunch of no's before you get to yes. I read like Grant Cardone, Be Obsessed or Be Average. Like I and I've even read books about people that like challenge my mindset. So I would also just encourage you. You can do audibles. Like I'm busy, so at this point, like I do a lot of audibles. But get the Libby app, get the Hoopla app. Like download books on like real estate mindset because you need 40,000 hours. They say to be an expert at something. So that's like a lot of time. And I have put in the chat, drive with your eyes open. So I know that sounds silly, but when I was being mentored a couple years ago, one of my homework assignments was to find this when I was working a 9 to 5. On your way to work, well, on your beaten path, find 50 vacant properties before we meet. I remember looking at my mentor like she was crazy. Y'all, I really just needed to drive with my eyes open. Like drive with your eyes open. Like I guess like I didn't see that stuff because like that's not what I was looking for. So just wanted to share that.
Fantastic. Yeah. Perfect segue for next week, Brittany. Perfect. 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 We're going to talk about all the variety of ways the houses, like she's just saying, you are passing vacant houses right now every time you run your errands. And it's just a different thing to go ahead and start opening your eyes and look, put your head on a swivel as much as you can without, staying in your lane the whole time, right? You guys drive safe, drive safe, drive safe, and stay in your lane. But start looking around you and see what you see out there. But does anybody else have anything else they want to say before we log off here tonight? Fantastic, fan. You want to have some fun, just Google how many times fear not is in the Bible. I'll leave y'all with that. And bless you all. Bless you. Thank you for coming. Thank you for taking the time to be here tonight. I really appreciate each and every last one of you and our guest speakers. And you may have noticed Matthew is with a bank, Federal Savings Bank. In 2 weeks at our Q&A, we were going to have a mortgage broker. If you remember last week, I told you the difference between your banker and your mortgage broker, right? So in 2 weeks, we are going to have a mortgage broker in the room, and we'll get to hear him talk about the different, how he works with different banks, as opposed to Matt could offer you what his bank does. And you may have caught and heard him saying, well, I can refer you to partners. I can refer you to, partners. So basically that's all he's doing, is looking for a mortgage broker at that point. But we'll have a broker in the room in 2 weeks, so we can hear what they talk about in the different programs and how they work. So fantastic. If nobody else has anything, I just want to say thank you all. Thank you, thank you, thank you. I've kept you 2 minutes past our time. I apologize for that, but I love you all and I appreciate you. And just watch your emails for updates or anything, and I'll email you Alita's pitch deck. And Brittany, if you want to send a book list, I'm sure everyone would love to hear the books that you recommend. Positive reading, motivation to keep that space between your ears in a good place. Then that's so true. And just like Alita told us all, it is very, very important to take that first step. I mean, we know that is the essence of faith. Take that first step. And right now, y'all, truly your first step is just start getting your contractor list together, find your RIA meetings and put those on the calendar and start going. Trust me when I say, when Brittany was telling you all that we all just want to see you win, that is the truth, 112%. That is the truth. We just all want to see you win. We're excited for your success as you will be. So thank you all again. I appreciate you being here, and good night, everybody.
Thank you.